The PCE numbers are in. We need to talk about that and the catalyst for next week. I am Dr. Stock, Doctor of Education, and a little bit of comforting fact here. No matter how hot it is outside, you're not going to bake today because it is Friday. Is that comforting? All right, we're going to pull up trading economics with the numbers from Personal Income and Outlays, which includes the PCE numbers that go along with it. And then we'll also take a look at the CME FedWatch tool and do some more technical analysis to see how the market's going today and talk about those catalysts, like I said, for next week. So here we go. This is trading economics. And today, 8:30 a.m. So 6 minutes ago, as I talk about this, core price is 0.2%. Previously 0.1, expected to be 0.1. This, even though higher, I don't think it's entirely rattlesome, and I don't think that's going to change the Fed's plan. 0.2 good, 0.3 not so good. This annualizes really well. So what else do we have on here? For PCE, personal income expected to be 0.4, coming in at 0.2. Not great if you're those people looking for more income. That means that it grew less than expected, but still growing. Not a horrible thing, just slowing down that pace. That's actually a good thing for those sooner rate cuts from the Fed. Personal spending, about even. Good to see that holding out. That can stave off signs of recession. And then let me close that out. There we go. And then when we look at the year-over-year numbers, it was 2.6 before, now it's 2.5. And on a core basis, 2.5, now it's 2.6. Again, I don't think that these are going to be entirely rattlesome. We'll see how the market digests it today. Now, let's move on from there into the charts, and then we'll bring up the CME FedWatch tool in just a little bit, because next week we have the rest of the big tech earnings besides NVDA. NVDA will be at the end of August. So that means we have Microsoft, we have Meta, we also have Amazon and Apple all reporting. Those are going to be major catalysts to the market, especially where the Qs are involved, which I believe are leading this market as we see it right now. So if big tech comes out and doesn't really speak about further demand or continued demand for NVIDIA products and services, I think that's going to pull back on the market pretty darn hard. It's going to kind of diminish that whole AI thing that we have. Plus, it's a show me the money kind of case for AI, much as what we saw with Google, that right now AI isn't quite producing revenue or income in a meaningful way yet. So we need to hear that commentary coming out of, I think Meta is going to be a really important one for that one. Also Amazon, as far as their infrastructure and Amazon Web Services go, that can also be, we want to hear big time about their payoffs. Apple, I think Apple's going to sort of have its own little niche part of things, although I think it can really help talk to us about the demand for AI. All right, so enough of that. Let's get into the technical analysis on the chart. So let me put this up here, and let's go back to the SPY for a moment. Back here is 8:30, and right now getting a little bit of softness here. However, I said yesterday, if you haven't seen my video, by the way, my video from yesterday is absolutely critical about the month of August. Go and check that out. So where are we at today with this bounce that I said we could potentially get if we have people covering shorts? Not necessarily saying that this is the bottom or that this is going to be something that sells off again, but importantly for SPY, if we open above the 50-day moving averages, that's a very good thing. That means that we went down through it a little bit, peekaboo down through support, and then quickly they would turn into resistance if we stayed under. But if the next day is especially good volume that we'd have over here above the 50 days, that means we have it once again as support. And this was just kind of a dumpy moment right now, and then we have to again wait for further details. But like I said, go watch that video from yesterday, from last night, about August. I think the thumbnail on it is "This is serious," and it absolutely is worth your serious consideration. This video is more in the near term of what's going on. So I said that we could possibly get a bounce, especially with all the sell-off, with some short covering from throughout the week, because it's been a big week for pushing down. As we get that profit taking, as we get that buying back from those short sales, it could push us back up. And so moving over to Qs, what we have, nice little volume spike there. Again, a little bit of softening, but nothing major following the PCE. So we'll see what the market gives us today. So like I said, same thing about the bounce that we could potentially see. Let me hide this stuff so you can actually see what's going on. Now, unlike SPY, we are actually down below the 50 EMA and SMA on here. So let me get rid of the EMAs for a moment so you can see more clearly. We'll even get rid of the Bollinger Bands. We're down below that moving average. That can be a bearish thing, but we are up above the 200-day, which is still a bullish thing. Being above the 200-day like that means that you can get very quick drawdowns, and then you can start drifting back upward once again. So this could be a short-lived drawdown that we're seeing. So that's also important to remember, especially in context of the last video that I put out there. If we fail to retake the 50-day, if we turn around and bonk our heads off that 50-day, then we could come back down this way and we could retrace. And I think that big tech and the Fed next week are things that are going to seriously impact that. So be on the lookout for that. We'll see if we get that bounce today. If it holds out, if it sustains, and I think that it will. So moving over to IWM, how did the Russell 2000 stocks take that PCE report? Well, a bit of a wild time here at 8:30. Sold down a little bit. Now it's gently rising back up. So we'll see how the market treats that. And if we go out to the daily chart on this one, which mind you, I want to go back down to the hourly chart in just a moment. You can see we have these high wicks, and we are returning back up to that 224-ish number, and we do want to break up above that 224. So where's the resistance for this? Right about 230. And if this is really a bull pennant that we're getting, that could push us up through 230. So we need to see what next week brings for us with what we have. If we get confluence between the S&P, the NASDAQ, and the Russell 2000 stocks next week, that can be a huge catalyst if it has the S&P and NASDAQ at its back to help push us up through, especially if we get something favorable from the Fed on Wednesday. So we want to be listening for that. So let me go down to the hourly chart on this. Hour, there it is. Hourly chart. This is what I want to show to you. Look at the consolidation pattern that we have, and importantly, we're now up on top of that consolidation pattern. There could be a much further rise from here if we stay on top of that and keep that resistance now as support from the consolidation pattern that we had over the past several days. So from Monday into Wednesday of last week, and then you can see we confirmed it from Monday into Tuesday of this week, and then we kind of wiggled around in there, and now we're breaking up over that. So we'll see if we can keep that. We're going to have to be able to break over to $224 in order to have room up to 230. So be on the watch for that for IWM. Now, Bitcoin in my video yesterday, I said there's buying pressure right there, and we needed to go up above 65K. We did, and now we're getting that strong move up on this one. Not sure why my volume's not showing down here. I'll see if I can get that going. I might have to open up a new tab in order to make that happen. So duplicate tab. There we go. And let's put up BTC again, and we'll go to the daily chart on it. There we go. Now we got our volumes back on, except for that's minute chart. Let's go out to the daily chart. Perfect. So volume yesterday, about average. We'll see. But like I said, that buying pressure, that bounce off the 50 moving average of support, good thing. We want to see if we're consolidating here or if we're going to push up above. That next move we got to overtake. We got to strongly overtake 68,000. That's going to be where we find resistance for that. Clearing 68, I think it's almost guaranteed, as much as you can guarantee anything like that. Then we hit 70. That could potentially happen over the weekend. We're going to have to watch and see, but we got to clear 68 in order to do it. So end phase yesterday, we were able to peekaboo up over 120. Pre-market, we're sitting right at 120. Look at that volume that we had following their earnings. That strong move up put us up above the 50-day. Once again, at full candle up above the 50-day. Those high wicks, a little bit concerning that we have. Let me zoom in so you can really see them on your screens there. There's the high wicks that we have, that selling pressure right off that resistance at 120. We filled this gap from back here. Over here, this was in June. We filled that one in the 12th of July, sold off again, and now we're getting a higher low off of that. This thing is starting to put upward pressure on that 120. We could blast through the top of that, and if we get favorable news next week, that can further that catalyst that we have for end phase. Absolutely keep this one on your watch list. NVIDIA, look at all this mess. Let me make this really simple for you. Look at the candle that we got yesterday. Look where our price action is today. This is indecision when you have those wicks like that one where the bulls and the bears are just fighting each other, vying for control. Right now in the pre-market, the bulls are in control, but we're still below the 50-period moving averages. That's the blue and the red. I'll take away the Bollinger Bands on here so you can get it even cleaner. The blue and the red lines that you see coming right up this way, those are the ones that we have to break up over. Pre-market's not doing it so far. Let me bring the technicals back here for you. If we fail to overtake those and fail to get out of this area of resistance that we have up here, then that could be something that sends us back down to support, sends us back down this way. I think next week is going to be the week where we really see a truer direction for where NVIDIA is going to go between the big tech earnings next week and their own earnings at the end of the month. So be on the lookout for that. I think this is still leading around QQQ by the nose. So if this wasn't recovering today, I don't know that the rest of what we would see for the NASDAQ 100 also recovering as well. So Tesla. Where do we find ourselves with Tesla? Well, it found resistance in the pre-market once again at 226. So rejected, pre-market also rejected. If we're able to overtake 226, we have room up to 236 to fill this gap that's up here. That is an updated technical from what I gave yesterday in the video as I re-examine things and adjust things. If we fail to break that, we can be back down to support at about 216, just below 216 at 213 is where we have that 50 period, that red EMA coming through here. And we do have a small gap to fill from 213 to 215. So if we're able to fill that teeny tiny little gap in there, that could be a place where we find significant support at 213, and we want to watch for that bounce coming through. It'd be really nice, especially as a long-term investor. It's always nice to watch your portfolio recover a little bit more from where it's been, especially when it was up here just a little bit ago, and now it's all the way down here. It'd be nice to see that gap fill to 236, and if we did, it might set up, and it really depends on a lot of things, but if we fill to 236, it's possible that we start to retrace back down again from there. So that's the take that I'm going into for Tesla. And now for the end of my video from yesterday, which I talked about to the people who are the risk cowboys, the ones who absolutely love the big risky plays that are out there. This last one I shared yesterday in my video. This one's for you. This is CrowdStrike. And will we get that bounce? Is the timing right for it? Look at the hourly chart with the descending wedge that we have. And we are starting to break out of the top of that, sort of drifting sideways. But if we can push up a little bit higher up above that, this is something that can absolutely rocket on us today as we start to get rid of some of that overdone selling pressure that we got from what we had. Well, I got to say overdone from what we can know about the issues so far. So we'll see if we get that recovery. It's highly likely that we get shorts covering today and it pushes us up maybe to 275-ish. We're going to have to see. I did post this over my stock group. I have a channel over in the StockMo Discord and also the Stock Squad Discord. And this is one because I know there's people all over who love that sort of risk and those sort of adventurous plays. I put this one out there so far, working out. We'll see if it can get to 275. If it clears 275, we have room up to 290, but that starts to get really aggressive from there. But we'll see. We'll watch what happens, and maybe it's a really cool day today for CrowdStrike. So guys, I'm gonna let you go on this one. CME FedWatch tool. Before I let you go, the last thing I wanted to make sure I gave you an update on this one. So let me put it up on screen for you, and we're going to refresh this. So that way we can see updated numbers because the PCE should be reflected in here now. So if I zoom, there we go. It still says 724. Let's try clicking the refresh button again. Now it did it. All right, so 7:38. So now this would be in that central time. So it's at past 8:30 Eastern time, market time. And as of right now, what I can see, we don't have any impact on July's numbers. Maybe it impacted on the long end of things. We'll have to see. There's an unlikely but unheard of chance that we get a rate cut in July, although I don't know that that would be a positive thing for the markets because the Fed said that they're not going to, that they need more data. I still think it's going to be September. You can see, according to the CME FedWatch tool, the bond market also thinks it's going to be September. And we go out to September, we have still 100% chance territory for one rate cut. And I think that would be something that isn't so bad for the markets. It's sort of expected. It's sort of according to plan. If we start to see more pressure down to 2 to even this 3 rate cut area, which is super rare, by the way, 0.3%, that would be something that I think would not necessarily be good for the markets because it spooked the markets. Why is the Fed all of a sudden being so aggressive with this when they said that they want to start tapering off slowly? And you can see even the bond market thinks that we're still on that path. So if we go out to December, just to see the long end of things, what did the PCE do for it as it came out today? It made it a little bit more peaky, that we're in the 450 to 475 basis point range. It was at 53% yesterday. Today it's at 57.2. It actually reduced the chance that we are up a little bit higher. It moved it down by about 2.3% towards this, making it more likely that we're in that 3 rate cut territory by the time December rolls around. So guys, I'm going to let you go with that. If you want to see my buys and sells, if you want to see my technical analysis, there's a link down in the description for the Patreon. And if you want to learn to do technical analysis like I do and really empower your portfolio through technical analysis trading, there's also a link for that down in the description. Thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.